'Cause this is how we do it. It's Friday morning. We're checking the spy. Checking it with our little sweet eye. Little sweet eye. That's weird. Oh boy, what do we got here? It is Friday morning, 9:30 a.m. on the Swatch Watch, April 28th. It's a Friday, so that means, yep, expiration Friday. Got some contracts expiring today. We'll take a look at those in just a shake of a lamb's tail. Whatever that means. I've heard that before, but I've never known what it means. If you know, please tell me in the comments below. SPY is having a good day again today for 1472, so that won't necessarily bode well for our call credit spreads, but it could make our one sole surviving put credit spread on the SPY could make that look good enough to close today. So we will tune into that. Fed meets next week, and then on Wednesday they will announce their decision on raising rates or holding them steady. I say they'll raise them quarter point again, and then maybe chill. Netflix and chill. We'll see. Here we go. Let's check the big board over on the Robinhood. Hey, we were just up and now we're going downtown to Chinatown. We were up 4 to 460 and now we're down. No, now we're up 28.54. How quickly things can change. Hopefully they won't change on what we have expiring today because all of them look good. We have the Blackstone 82/79 put credit spreads, 5 of those contracts. It says it's at 100% profit, but you can't close them unless you pay us a penny or more. In this case, it would probably take 3 to close it right now, so we'll let that ride. Currently, Blackstone at $88.14 a share, up 2%. The CAT credit spreads 205/200, 2 contracts there. That's at 98% profit. Ford, what's Ford doing? Hey, Ford is up to 1175, 1.29%. So that position's looking very nice. Marathon, that's making a comeback. You know, you said don't call it a comeback. Well, sometimes it is a comeback because they were putting some heat on me yesterday on our put credit spread 119/116. How many credits? Five contracts there. Let that ride for now. And Target looking real good as well, up $135, almost at full profit. 5 of those contracts, 152.50 is our short strike that we have to protect with our lives. It's at 157.59, the share price of the stock right now. So that is good. All good right now on expiring contracts today. However, when you get to the first contract on the board for next Friday, woo, it's still making my butt stink. AbbVie is up just a little bit today. I was hoping they would be bouncing on up. We'll see what they do next week. I'm not too concerned on that. I'm not very concerned. So it is currently at 149.80. Now, me not being concerned doesn't mean I think it's going to rise back up over 155. I'm just not concerned because we'll manage that position. And if it's close to the 155, we may even consider taking those shares. Yeah, right, Bart. You always say that. Then you shy away. You run from the wheel. Kind of true. Citigroup call credit spreads are at 100%. You know, that could change in the meantime. CVS still just kind of meandering around there. What is the share price of CVS? Currently at 73.30, so that's looking good against our $70 strike price on the put credit spread. EOG, you down with EOG? Yeah, you know me. Got a 124 strike price on the call, and they're at 118 and rising. I see an oil stock rising. Oil is up today, right? I think it's up. I think everything's green across the board here. S&P up 0.5 point. Dow up nearly 0.5 point. NASDAQ 0.32. Russell up nearly 1%. And then crude is up 0.39% at 75.05. We need that to get back up to $80 bills. Not for the gas that we put in our tank, we don't want that price to go up, but it will. But in the meantime, if we can have these oil companies that we own or are wheeling or are selling puts and credit spreads, etc., if we can have those profits pay for our gas bill, our gasoline bill, then it's okay for the gas prices to go up. That's how I see it. That's a weird way to see it. It isn't. It's kind of fun. Kind of fun, but like, Valero's giving me the bitter beer face lately. We'll check on their positions. The Googler, what's Google doing today? We're deep down in our whiskey on Google. They're down a 1.16% today at 107.09, but our $99 call, we've been just milking that thing for everything it is. We're going to milk it again if we get a chance. When does that expire? Next Friday? In fact, we may roll that thing right now. What would we have to do to roll it and collect dollar bills? Let's see. So that's a 5/5 expiration. I don't think we can cover that on 1 week, can we? Because it's deep down in the money. That's how I come unwound. If you've never heard the song Deep Down in My Whiskey by Alan Jackson, look that up and play it. But you need to be in a little bit of a somber mood. You know how those country songs are. So we could roll it 1 week out and collect a couple of dollars, $64, and still maintain our ownership of that stock. But how would we look at that? Would we look at it from, should we just free up that position and take the assignment? Because we are at our position's 92 and change, right? We got a good deal on the Googler, 92.47 on our 300 shares. We have two separate calls out there. We have a $100 call at $5.19 and a $99 two contracts that expire Cinco de Mayo. What if we match those up? What if we roll it out to $5.19? What would it look like? And maybe even at $100. Should we do that for fun and profit? Let's find out. Roll out the barrel, roll this position. Had a nice conversation at the Meijer checkout lane, the self-checkout lane. There's a guy that I really like there, older guy. And he's, the best one there. Like if there's ever any concern or when I'm buying my wine, he has to come over and verify that I'm 100 years old. So that's what I look like. But we started talking about, he saw my Packers hat and we started talking about football. And he asked me my opinion on Jordan Love and how I felt about Aaron Rodgers being traded, etc. And then he's excited, of course, for his Bears because now the division has a little more daylight in it without Aaron Rodgers. And I said, don't be so sure. Don't be so sure. Do not count out my young guy, Jordan Love. But we did have a nice conversation. And then he handed me a $5 off my next visit. He's like, here's a peace offering. Let's just be friends and have a healthy battle between the Packers and Bears. I said, hey, I'll do that all day. And twice on Sunday. So I got that going for me. So if we roll it out and up to $100, we'd still collect $24. But you trap that money, right? You trap the dollar bills for 21 more days. Well, you're not doing anything with it anyway. You're sitting on a pile of rusty cash. Yeah, but it's collecting 4.4%. Could we run numbers on this? So what would we run it on? The 92.47? I think you'd have to run it on that. No, you'd run it on the actual cash that you would receive on the $99 if you let those be called away, right? Instead of rolling them. What does that return look like? This is now turned into a debit. So let's go back to this. Let's pull that off. Put the 99 on. Now we are up to 120. Wait, what's happening? It's changing right before our very eyes. It's like really, it must be a big wide bid and ask. So let's go to the abacus. Let's go to the abacus and just run it from. So we would be adding 2 weeks, not 21 days. What's the net? Net, yeah, right there. Plus 14 days, time change. So we would use that math, the 14. Okay, so if it's $130 we collect and we used the $99, so that would be 19,800, right? Divided by 21 and then multiplied by 365. That's 11.4% on the Googler, which we like, and that's way more than 4.4% on cash just sitting rusting in a rusty pile. Mm-hmm. Yep, we're gonna do it. We're just gonna do that. We'll see what that bid and ask is. It might be pretty wide. Oh my gosh, what in the world? Are you serious? Are you kidding me? Are you kidding me? Mm-hmm. I want a credit. I want you to give me the money. Show me the money. Let's see this. I don't know. Maybe there's enough activity that it's going to fill at some point today. But there's, for some reason, an enormous bid and ask difference there. So we'll leave that on the board and get back to the big board. Anything else? What about that credit spread? Okay, so we got this SPY credit spread. Currently, it's qualified at the 63%. We must not have much up on that, right? So it's a $2.50 wide. So that's $250, $1,250. $1,250 was the collateral, and we didn't collect a bunch of money though, did we? No, $95. So we can't meet part 2 anyways because we don't have enough on the table to meet our plus 100 for the trade. But I really wouldn't have any problem taking the $60, putting it in my pocket. So we'll look back at that. What's the SPY doing right now? Get back up, yeah. So if it continues to hover around 414, that'll be good for a couple things. One, to take that put credit spread off the board, and two, to sell a call credit spread at the end of the day 2 weeks out. So we'll look at those things. I'll be back in just a moment. I got to drink some more coffee, and then we'll get over to barchart.com and get our put options scanner going and see if there's anything interesting there. Thanks for tuning in, and I'll see you in the next video.